Hello everyone, Maurice and welcome to Tanks Invest. Talk about investing, finance, fresh development. For today's video, 8 terms only. So for today's video, it's going to be a little bit more conceptual rather than more tactical, if you may. You know, the typical video that I do on more of the current state of the macro and microeconomics for the respective stock or the respective cryptocurrency. But for today's video, I want to talk a little bit about just the mindset, the methodology that I typically use whenever I'm investing into anything with respect to real estate, with respect to stocks, with respect to cryptocurrencies, or even memorabilia or collectibles as well. So with respect to my prior experience, I spent about 7 years in my career on Wall Street, both on investment banking. I worked at JP Morgan in the mergers and acquisition group focusing on technology investment banking. And subsequent to that, I worked in middle market buyouts, focusing on private equity investments, investing into middle market companies that are typically anywhere range from $500 million in market cap to northward of $5 billion in market cap. So ranges around there. So in collectively, with my experience before moving on to business school, I got my graduate degree at Stanford. I have collectively crystallized the sixth factor on how I structurally think about investing. Whenever I'm approaching an investment opportunity, I always go through this checklist. And it has always worked out relatively well for me. It gives me that clarity, it gives me that sense of structure, and it always gives me that execution mindset into thinking about the investment opportunity logically by breaking it down like basically a SWOT analysis, right? A strengths, the weaknesses, the opportunities, and the threats in a very structural, clear, visual manner. And through that, I was able to accumulate a relatively good amount of assets, money, if you may, at a relatively young age. I just turned 30 recently in May. So I turned 30 literally 2 months ago. So I'm still relatively young, but I look forward to utilizing the six factors and gifting that to you guys so you guys can apply the same mindset into investments going forward. So stay tuned, stick around, and let's make some money. Alright, so moving on to the six factors, the methodology on how I look at investments, right? So with respect to the presentations that I'm going to be talking about for the next minute or so, the structure is basically going to start from the most macro level, the most high level, all the way to the most granular level. Whenever you look at any investments, we always want to start on the high level so you don't want to overwhelm yourself, right? So firstly, whenever you look at a stock, a cryptocurrencies, or any investment opportunity, number one, you have to know what is the industry that you're looking at? What's the market size that this investment opportunity, this stock, this real estate market, how big is it? Is it in a growing industry? Or is it in a mature industry? Is it in a decline industry? Right? We always invest into companies that are in the growing industry, right? We never want to be investing into companies or any assets or any collectibles even that is on a decline. That's just a more of a macro understanding, right? Because that has a drag effect and a correlation effects to all the other more granular or more microeconomical type of factors, right? So that's number one. Whenever you look at any investments, always look at the end market industry first. Is it growing, right? Secondly, with respect to the business model, and this is more ties to obviously equity, as you are obviously when you buy stocks, you're buying basically a share of the company, right? So understanding with respect to this company, how recurring is the business model and how defensible is the business model, right? You can understand that basically there are two types of companies basically, right? There's one that is subscription based that are recurring, like a Netflix, like a Hulu, right? Those type of recurring payment subscription type of businesses that generate a monthly cash flow for the business, right, to sustain the operation. And there are some other companies that are in the aerospace and defense sector that are oftentimes contractual, that they have to submit some sort of like a request for proposal, a RFP or something like that. And the predictability for those type of top line revenue or cash flow typically not as predictable, right? Because you have to go out to basically bid for the contract or try to win the contract, every quarter or every month, right? So for me as an investor, I tend to stay away from businesses like those contractual type of businesses. But obviously, some businesses are more of an outlier, right? But typically, in more of a majority of spectrum in the portfolio, you typically want to incur more businesses that are recurring in cash flow nature, right? And that ties to my next point. With respect to the management team, right? With respect to ultimately as an investor, we are basically betting on the management team on executing the value proposition of the business, right? We're not really going to be working in the company, right? We are observer, we are advocates for the company. That's why we invest in the company, right? But ultimately, we have to understand with respect to the founders or the management team, the executive management team, how relevant are their experience, right? Are they backable, right? Do they have the relevant experience? Do they have the track record on executing M&A deals, operations, or scaling the business from point A to point B, or building a team, being a good leader? All those characteristics, right? And by doing that, you can watch like YouTube videos on how they project themselves on the public space. You can read about their verbiage. You could follow them on Twitter. You could follow their LinkedIn account and understand their track record. And then oftentimes by triangulate all of these media affectation with some grain of salt, obviously, and your some due diligence on their resume and their credentials, you typically will understand more about how backable are these management team, because ultimately as an investor we are basically giving them the trust, and to do that, to do your due diligence on the characteristics of this management team is extremely critical, especially for more, of early stage businesses, which is the space that I'm currently in right now as a venture capitalist. So as the next level would be the financial fundamentals, right? Understanding, and you don't have to go crazy like doing a discounted cash flow analysis or like an LBO model. I don't think you need to necessarily do that. You just need to understand the high level metrics, right? Like the top line revenue, looking at how the top line revenue has been growing in the last quarters, right? Or the last 3 to 5 years. That's sufficient for us to understand the vital sign of a company, right? How sustainable is the business so far, right? Understanding top line revenue, has it been growing gradually, or has it been kind of fluctuating on a monthly basis or on a quarterly basis? Because that shows some signs of a weakness from the operating team, right? From the management, right? And looking at the operating expense, which is the company's expense, like how are they spending on R&D, how are they spending on marketing, how are they spending on anything in general, right? How thoughtful are they with respect to spending these money, right? Because when a management team is thoughtful and they're strategic about their capital deployment on either buying a company with capital expenditure or incurring a big purchase for maintenance costs or factory expense or machinery and stuff like that, they oftentimes go through a relatively thoughtful plan process, right? So when you see a high fluctuations in the operating expense, which subsequently will hinder the operating margin, that shows you that there might be something kind of iffy with respect to the management team on how they're operating and how thoughtful they are in operating, right? A typical good business would have a relatively sustainable margin that doesn't fluctuate a lot. It will be kind of level at the same level, but it will show some signs of like optimization. It will actually improve over time while at the same time the top line grows. It doesn't fluctuate like 1 year is like 24% OpEx margin, and then next year is like 10%, and then next year is like 5%, and then go up and 35% again. It doesn't happen like that if you talk about like a well-run company. Especially like a blue chip stock, right? That doesn't happen. It might happen more often with respect to like more high growth stocks because they have to go through a lot of the operational hurdles. They have to jump through a lot more hoops, and they have to build a team at the same time scale at a relatively massive pace, right? So that definitely that's also another caveat that you want to think about, right? And then the next level would be valuation. Understanding using the technical analysis by understanding the charts that we have that tells you the psychological affectations around the stock price, but also doing research on the valuation, comparing companies that are comparable to the business that you're buying, or looking at the house that you're buying, right? Or buying a pair of sneakers on StockX, right? Are you buying this on a discount? Are you buying this on premium, right? You always obviously want to buy at a discount, right? Or at least more leaning toward the spectrum or the propensity of a discount, right? You don't want to ever overpay for anything. That's just the fact of life, right? So understanding like just doing research on due diligence on the market, right? And with respect to investment banking, you'll typically do something called the trading comps analysis by looking at how this company is being traded at in comparison to other public companies that's being traded on the stock exchange. Also, you might be doing some like mergers and acquisition transactional comps analysis, right, to understand how are these companies that are in the similar type of sectors of the industry with similar characteristics were bought out by either a private equity firm or by a hedge fund or by corporate investors or whatever, right? How much are they paying? What's the premium that they're willing to pay? That goodwill that they're willing to pay, and then calculate that and compare that with respect to the investments that you ideally want to be buying at, right? And lastly, would be exit strategy. When you invest in anything, you obviously have to have an objective of when you're going to sell. And with respect to exit strategy, it's a delicate balance between being too greedy, while at the same time being too stagnant and not doing enough. So exit strategy is a logical thing that you could calculate based on the projections of your financial model, that at a certain point, when the stock price or when the valuation gets to a certain level, most of the time mainly influenced by the macro affectation that causes the stock price to be inflated a lot. For the example last year with Tesla hitting $900 at one point, if you look at the chart, you will understand in a technical analysis that it was highly overstretched. So at that point, maybe it was good to probably liquidate some of your holdings, right? And my typical methodology is to liquidate. If you have like 100 shares, I will liquidate like 40 shares, 40% of my holding, and keep the 60% that I have, or the 60 shares that I have, and continue dollar cost average when it goes down, right? But with the 40%, allows you to obviously capture the profit that you're looking for, but at the same time, you still lean more of a bullish sentiments down the road in a more of a long-term value proposition perspective, right? These are the 6 factors that I would go through typically when I'm looking at investment opportunities. And I would literally just, have a piece of paper and I draw this six bullet points, right? And I would do a SWOT analysis on each of them. What are the strengths of this weakness? What are the weaknesses of this industry? What are the opportunities that you see in this industry? What are the threats in this industry? And you do the same thing for the business model. Do the SWOT analysis for each of them. And once you are able to flush out the SWOT analysis for these 6 bucket points, and you are being frugal and being thoughtful with investing, and you continue the dollar cost average wisely, and you keep an eye out on and being alert on following the macro news, by doing all of that, you are thinking as an institutional investor. And that's the knowledge I want to pass down to you. Is the reason why institutional investors are oftentimes winning the game is because they applying this very disciplined methodology by having a team to obviously work on this in due diligence, doing the research and formalizing their thesis, right? And hopefully with my years of experience on synthesizing and simplifying this methodology of the 6 factors, going forward, whenever you're investing in the future, apply the same methodology for yourself, and I promise you it will structuralize your thinking, and you'll think a lot more logically, and you will have no emotions in play. Again, you don't see any emotions that I put in here. These are just logical facts, simple methodology to apply to minimize volatility in your mentality, but at the same time, you can maneuver through the murky water of the macro and microeconomical cycles that you see with your investments going forward. All right, so that's it for today. Respect my 6-factor methodology on how I approach investing. Hopefully you guys find this helpful in terms of like structuralizing your investment methodology going forward. And if there was anything unclear or anything that you want me to further clarify or elaborate, I'm happy to further dive into in the comment sections, or if you want to do like a follow-up video, I'm happy to do so as well. Yeah, feel free to ask me questions. I'm relatively responsive, and please hit the like button, subscribe button, and notification, and watch out for the next coming up. Take care. Bye.